Why are mid caps so unloved, David Sowerby?
Tom, I think it's because they sit a little bit in no man's land. You have small cap stocks that are trying to graduate to mid cap, large cap stocks that sometimes are on their way to mid cap. And if you think about as you position portfolios, the small cap manager is going to own names and continue to have conviction that migrate up. Large cap managers are going to migrate down in cap. And sometimes that exclusive mid cap manager gets forgotten. That's why I like something like SMID, small and mid combined.
Small and mid combined. I think about Kellanova. I don't know where you put that. I mean, that's a $20 billion market
stock.
cap. Yeah, absolutely. Spun off from Kellogg's. Because Cheez-Its, Tom, and we like Cheez-Its here at 730.
We do like Cheez-Its. Yes,
Exactly.
we do. It's the official food of Bloomberg Surveillance.
Exactly. So, David, talk to us about a company like Kellanova.
Sure. Don't forget Pop-Tarts and Pringles
Of course,
as well.
of course.
They're growing internationally.
Battle Creek, Michigan.
And in the both cases, yes. And Kellogg, the old cereal play, is having a good run as well. If you look at the Bloomberg Spinoff Index, it's up 25% year to date. Over the long term, one of the best, if not the absolute best formula for unlocking value in that small mid-cap area is to buy the spinoffs. And they're back on their treadmill again in 2024. And that's why I think the ability for a small mid-cap manager to outperform their benchmark is going to come buying spin-off stocks
Right.
like Kellanova, like Aramark, which spun off its uniform business, and now it's just food at sports venues, universities, hospitals.
Right.
I like spin-offs, and they're a great
Duke
formula.
Final Four appearances. It looks great. Bloomberg Spinoff Index, Paul Sweeney, BNSPIN. BNSPIN is the index. It's on the Bloomberg terminal in your car and next to your YouTube remote control.
Exactly right. All right, David. So we step back and we think about this market here. The first quarter was just such an extraordinary performance, and really coming off those October lows, up over 25% for the S&P 500. Do you get concerned that this market might be overextended here a little bit?
Not so much overextended, but maybe that pause that refreshes. And even though the market had that 10% gain in the first quarter, the median S&P 500 stock, the median, was up about 7%. So I think there's more room to go. You're able to find companies that are generating favorable free cash flow margins, growing the dividend at close to a double-digit pace. And I think there's more room to go, recognizing the ever elusive, we will get that 10% correction. You just got to fight and grind through it, because taking too much evasive action, trying to predict it, futile.
Crane, CXT, currency printing presses.
I've been to their factories. It was a rite of passage. You
Yep.
went to Crane Stationery,
Yep.
and you were bored. If you fell over, you'd fall into a vat and die.
Exactly. So,
Rite of
I haven't
passage.
thought of Crane CXT in a long time. Talk to us about that story.
Well, it's a spinoff from Crane, the industrial company that has a 100-year history. So what we're seeing is not just currency demand in the U.S. as the Fed was on this 25% M2 money supply growth rate, but we're seeing it internationally, and there's more concern about fraud. So that plays into their ability to print currency and avoid fraud, and that's a global story, and it's a spin-off story as well.
I look at this, David, and it's a great bull market, and I'm going to take it off what I call the Ancora Yardeni low of October 2 ago. What happens in a second leg of a bull market? I mean, you're a trustee, you have some serious money. What's our behavior we should expect in this second leg of a bull market?
I think it's still that the micro is going to trump the ever concerns over the world is a more dangerous place, macro uncertainty, but companies are going to grow their free cash at about 15% in 2024. Valuations today for U.S. stocks, large cap and small cap, I think bode over the next 3 to 5 years to compound at a 7 to 8% price gain, add in the dividend, and it's hard to beat that anywhere outside the U.S. So I think continuing to migrate into U.S. stocks. And for those small cap stocks, maybe a little less money into private equity given the leverage, and deploying that in small cap makes sense too.